Morning all. How are we all doing? So, just drinking water and suddenly realised I'd pressed the go live button. And I was like, never mind. Anyway, how are we all doing? Morning, Ian Yotko. By the way, it's Thursday morning, gym day. Ian Yotko, Baggy. I don't normally turn up like this if you're new. Evil, Virginia, Martin, Amy. Martin? Who the hell's Martin? Mumo. Steve, Alan Bay, Alex, Kennelly. Christian Evans, day trader. Ego, sir. Sega, it's time. Gregors, Senji, how we doing? Thanks to everybody again who was on the live stream yesterday and gave me loads of tips. That was a big shock yesterday, and I have managed to buy my Lamborghini with your tips. So thank you very much. I now own a Lamborghini, and I've got some change as well. Morning, Michael. So, what's the time? 8 o'clock. Market's open. Crap. News is gone. Oh my God, I'm really late this morning. Right. So, this morning, news, we have the Swiss GDP, which has come out as a positive. Damn. I wanted that to be negative. No, I didn't. I wanted it to be positive. Yay. Sorry, I'm not with it yet. So Swiss GDP has just come out as a 0.3. They're forecasting a 0.1. So the inflation has not got down as far as the Swiss were hoping it would, which means that should be slightly bullish for the Swiss franc. So that's good because I've got lots of shorts against the Swiss, I think. I need to have a look. But yeah, so that's the news this morning. Swiss franc. It is only an orange news because... And again, this is another one I think on the news they need to change. The CPI figures for Japan are yellow, meaning that they are not important at all. Orange is slightly important, sometimes has an impact. Red is a high impact event. This is orange and always has been orange because the Swiss franc very rarely ever changes its interest rates because its economy is super stable and they are super rich. So you don't really need interest rates to control inflation because they just don't have it. It's just stable. But obviously what they've been doing over the last 18 months with everybody else or 2 years is increasing interest rates. So this is actually an important release now, the GDP figure. Sorry, what am I talking about? CPI. The GDP figure. And their CPI figure, obviously. It's one of those things basically where I think they need to kind of change it because it is important now, GDP and CPI for the Swissy and also for the Japanese. They should be changing those to red because we're all driven by inflation and interest rates now, and the GDP is a factor in that. So that's gone up. So that should be bullish for the Swissy. We'll have a look at that in a sec. Other news today, we've got the GDP figures for the Canadian dollar and unemployment claims at 1:30. I'll be on at 1:15 this afternoon to trade and look through the unemployment claims. Let's have a quick look at the DAX. Yesterday's DAX was a whitewash. I am hedged on the FTSE already. No trade on the DAX. Why is there no trade on the DAX? Oh, I got a short on from yesterday. That's because I restarted the terminal, isn't it? Yes, yesterday. This is something I've learnt with the SIH EA. It's the second time I've done this, actually. If you restart your terminal while you've got trades on, the EA doesn't pick up the fact that you've got trades on because it resets all the variables on initialization of the EA, which happens when you restart. So if you interact with trades that it had already taken, it won't do what it should do. Yesterday, I got out of the longs. Look, I exited the longs there as we put this M pattern reversed in yesterday, expecting it to take an automatic drawdown control position. Then I went downstairs and had dinner. It obviously didn't take that. That would have got me out of the trade. And I'm still in the shorts. So DAX, you would have broken long and hit 1R. That would have been a profitable trade this morning. I've got to deal with that now. I'm going to have to put a stop loss on that. on those DAXs. Where should I put it? 176.58. 660. That was a cock up, wasn't it? So if you did take the ORB long, depending if you're going for 1 hour or 2 hour, you've had 1 hour out of that this morning, and FTSE I'm hedged. So basically, yeah, yesterday I didn't get out of the DAX because the DAX yesterday just did that all day long. Literally didn't move. And then in New York, we pushed up above the highs and did the same thing all day. Absolutely impossible to make money out of these things at the minute when they're like this. So I did have an exit on it yesterday. I read it exactly right. Exactly what I wanted to do happened, but that was my fault because I restarted the EA. So hopefully the DAX drops today and those sells will make me profit, or at least I can get out of them. Hedged on the FTSE. I'm going to leave the TPs where they are. That's a 3R to the upside, which is beyond ADR today, but the ADR on this is a little bit thrown out because of the pre-market data. So that is fine with me for that resistance. Downside, that's going to be yesterday's low. So I'm happy to go for a yesterday's low retest to the downside today. We'll see where those go. US indices yesterday were pretty good. So the NASDAQ yesterday, I got out of no, I didn't get out of the NASDAQ yesterday. The NASDAQ was a loss, a locked-in hedge yesterday. The S&P yesterday was a win, clean break, second half exit. And the S&P and the Dow yesterday was a hedge exit. So short and long got hedged, exited the longs on the M pattern reversal. This is exactly what I played on the DAX, except the DAX didn't execute the aggressive drawdown control because I cocked up. So that is the trade on the DAX that I was expecting to happen, which happened on the Dow. So the Dow and the DAX would have done the same thing, but I got out of the Dow. So the Dow was an exit with profit as well. So that's my fat finger. Right, so let's run over and have a look at the FX. Hopefully that DAX drops. If not, I'm just going to stop out. I'm going to have to take a loss on the DAX this morning, which is annoying. Never mind. Right, so overnight, let me just catch up on the chat before I carry on. Morning, everybody else I haven't said hello to. Michael. There's two Michaels. Pappy, just following Bootcamp, working with EA. Cool. Morning, Neo. Today is a volatility day. I hope so. It's the last day of the month. So, and also, if your birthday is today, happy 12th birthday, or 13th, or 14th, or however long your birthdays are, because it's a leap year. And we don't have the February the 29th every 4 years. So everybody that's born this day, you need to divide their age by 4, and that's how old they really are. Okay. So they live a lot longer than everybody else. Morning, Shroud. Wet hair day, yeah, it is. Right, so this morning we had quite a lot of volatility coming in on the yens specifically. So as you can see with the ADRs, Aussie dollar, New Zealand dollar, we'll go through the ADRs first. Aussie dollar, New Zealand dollar is a hit to the upside this morning, just hit and a double top. Very nice. Short opportunity there. Got a lovely shooting star going in. At the moment up here. Yeah, so limit orders triggering at yesterday's high, pushing the market back down again. So you've just tapped ADR. I don't like it when you tap ADR exactly, but I mean, it is a potential entry. I like it to get much more extended than that, but there is an entry coming up there. So you are getting a reversal starting to happen on that one. CAD yen. ADR to the downside. So really strong yen move overnight. Let's just quickly whiz through financial juice and just see if there was anything that caused this. Here we go. Yeah, there's some Bank of Japan news. So this is last night. Japanese large-scale retail sales at 3%, same as previous, so it's nothing to do with that. Australian retail sales 1.1, so that is slightly negative on forecast there. Okay, 2% inflation target in sight despite uncertain economic output in spring wage talks, Carter suggests considering flexible response, including exit from monetary stimulus, putting those interest rates up to 0. So again, they've mentioned again, they're looking at putting the interest rates from -0.1, which they've held for 7 years, up to 0, bullish. So that's why we've had that move on the yen overnight. This is what I've been waiting for, them to actually pull their finger out and start doing what they said they were going to do last month. I'm undecided on the monetary policy decision for ending negative interest rates in March or April. Not sure whether I'm going to do it in March or April. It's coming. Yeah, positive, bullish. So that's why we've got the move on the yen. Thank God, at last. So we will see. I mean, they do obviously change their mind like the wind, and they do let us down regularly. They say stuff and they just don't do it. But that is a very good news for the Japanese yen. We also had the US dollar pushing again yesterday against that high from last week. So that's obviously prompted them to do something about it. You know, talking heads move the market. You need to come out and say one thing and the market will do exactly what you tell it to. So that's exactly what they've done there. So that's good news. So if we look at the yens, obviously the CAD yen. So all of these are potential ADR reversal opportunities. Not really ones that I would want to get into, but the EA has taken the trades. So I am in long on the CAD yen. I'm also going to be in long on the Swiss yen. I don't really want to be on either of these or on any of this. I'm going to be on all of it, unfortunately. Euro yen. Oh, look at that. Just missed my TP. Literally missed my TP. By 1 pip. Right. Euro yen. So I'm going to have a look at closing all this out in a minute anyway. Pound yen extended to the downside. So there's two schools of thought. I'm out of the pound yen. Shorts flip long, obviously, on the reversal. New Zealand dollar yen, same thing. That isn't a long position yet because it's not hit 125 ADR. US dollar yen will also be a long position because obviously it's pushed down. So I'm hedged on these now. So all of these are potential long opportunities. However, we have been waiting for the Japanese yen to power up now for a month. Well, actually 2 months. Yeah, but this is going back to Christmas, New Year. So this is the start of the year. We've been waiting for this move on the Japanese yen now for 2 months. They said they were going to increase their interest rates somewhere back here. Then they said when we got to here, if you do not stop pushing price higher above this 148 level and you go up to this 150 level again, we're going to do an intervention. The market listened. They pushed back against them. Then the Japanese started screaming again and said, you don't touch us here. If you do it, we're going to push the button. You're all going to die. We didn't do anything. Now the move is actually starting. The EA's flipped me long. So I don't really want to be long on the yen. I want to be short. So I'm going to look at the current situation on all of these. And obviously we'll start closing positions out. So yesterday closed out 2.4%, up 15% on the month. 1.5% closed out this morning. So all of these yens, I'm just going to close out. So let's start with the US dollar yen. So first position is all the way down there. I've just got a buy on. I don't really want a buy on. I want to be selling. So I'm going to close out that long. And I'm going to close out that short. I just want out of some of this. So that gets the exposure on the US dollar yen. I've got one in profit, one not. Yeah. And I am below average price. However, I'm not in profit yet because obviously there's masses of swaps. I've got to get rid of this yen because of swaps. So still looking for it to push down. So that will be a TP on those two positions. So there'll be more profit there. But I do not there is a good chance. Yeah, we're 150, 175 ADR, 200 ADR, I think, on some of these, aren't we? No, 175. So 150s and 175s. So there is a good chance that we will get a pullback off of that reversal and then another leg down. Yeah. There is a good chance they will come out and say, nah, we're only joking, and it comes back up again. They do that. But there's a probability that we might come up and do that, which means you can get out of these long positions. But we've been waiting for this for such a long time. I get the feeling the market might just run on this. So I'm just going to get out the longs just in case. US dollar Swiss, just seeing if there's anything else I can bank here. Pound Swiss is running nicely. Pound odd. I didn't set a target on that. That's my cock up. That was target. Damn, that was propulsion target. I'm just going to close the pound odd out. That should have been closed out at target because that is where I would have taken the profit at the bounce at support and propulsion gap. So I'm just going to take that. I've lost about a third of the profit on it, but Euro yen. So Euro yen got a long on as well. Closing the long. Do not want that. Closing. Look at that. Just missed my TP. Look. So closing the top position out. So that's in profit. I'm going to do some DD control on this bottom position, which is 265. I'm going to close half of that. And I'm going to close, we've got 3.24. I'm going to close to 13. Close out half of that. So just doing some DD control. Now we've got the move started, just to reduce the lot size down, just in case. You know, this is the Japanese, but and I will now move these TPs down further. Why are you not letting me move that TP? 62033. Bear with me one sec. What is that then? 162.036. Is that one? Whatever. Something off. Don't know why it's not letting me do that. Euro Swiss, Euro odd, CAD Swiss. So CAD yen long. I do not want. Swiss yen long, I do not want. These may all play out, but I've been waiting for this move for such a long time. The last thing I want to do is jump on board in the opposite direction at the moment. So there we go. So banked 2.5%, drawdown now down to 9.8 on the account, which is good. Swiss franc's moving nicely today as well. So we should get some strength on the Swiss franc, which it looks like it's starting to do now based off the back of that news. So it's slightly positive news. We already had that move kicking in on the Swissy. So I'm looking for a little bit more movement on the Swissy, and hopefully we'll be able to get out of a lot of this Swiss. If we can get an ADR hit today on the Swiss franc, that would be fantastic. I need to put those TPs down a little bit further as well, because these swaps are just killing me at the minute. You know, that target there. So the profit on this one from here, which is the average price, down to there. See where the price is now on the CAD Swiss. It's at break even. there. So that much movement is my swap cost. So if I took TP here, I'm hardly making any money. So I need to basically got to let the market run longer with the positions to be able to pay for the swaps because of the time that they've been held, which is, you know, there's been a lot of squeezes this month, which have lasted a lot longer than normal. Okay. So there we go. So there's your ADRs. So 15% on the month. I will do a video later today, just covering basically what's happened this month, how it's all gone, same as I did last month. RSIs. So there's quite a few RSI extensions to look at today. New Zealand dollar yen, Aussie dollar yen, CAD yen. I suspect I've got a load of longs on. Yeah. I've got one taken from the small. When the hell was that long gone on? Yesterday. Nothing I can do about that. You have to deal with that one. So banked 8% on the month. Not a great month for H1M5. It's not a bad month. I mean, I average somewhere between 5 to 15% a month. Well, I do somewhere between 5 to 15% a month. So it's an 8% month. Not great, not hideous. I have got more that I should be able to bank today on these yen moves. So let me just quickly run through these yens. Aussie dollar yen, nothing I can do about that long. I'm going to need to take a second on this to try and get out of this on any kind of pullback. So that's an ADR. So I'll be getting into a second position on that today. 38. $37.5. That's going to be tight, isn't it? See, this is the time, yeah, talking about the new position trading EA. This is the time where I want that button, yeah, on the new EA. I'm looking at this and I'm going, that reversal alert there, if that candle closes there, that will take a trade. If that candle closes there, it won't take a trade because the distance between the entries will be closer than 38 pips. That's 37.2. So with the other EA now, I'd be going, there's a chance it ain't going to get on. Buy. And I just hit the button now and say, just get me in. Then it will go, all right, no problem. We'll put the next position 3/4 of an ADR below you. This is the exact scenario that I've built that new EA with the buttons for, is just so I can just do that and go, yeah, that looks about right. It's ADR. It's already extended today. It's a chance I'm not going to get that on. I'll put it on now. And if I can get a push up to there, I'll get out of both because I just want an exit from the position. But anyway, so yeah, Aussie yen, I'm going to put a position on manually because I really don't want to be long. I don't want to get stuck in it. I don't want to get out of a squeeze on the yen into a squeeze on the yen. I want to just give it time to play out. So I'm just going to place a pending buy stop there, just in case. Now, if that triggers and we do get a reversal alert there, or it goes down here and we get a reversal alert here, then that's fine. Because if it pushes up and it triggers that as well, I just want out of this at break even. I don't want to be in it, basically. It's not a profitable trade. I just want to be out. So placing that one. The other yens, CAD yen long. Just one out. Don't want to be in it. Euro yen. That's all shorts at the moment still. Haven't got a reverse alert on that yet. It's just about to reverse alert into a long position. You watch. Literally, within the next 30 seconds, we'll watch it. It's going to trigger a long. Assuming we are H1 RSI extension. Oh, no, we're not extended. That's okay. I won't get into that. So, nice profit on this one at the moment. It's pulling back at the moment off of 175 ADR. So, I'm just going to bank and do DD control on this. Just in case. So I will close. What's that? 15. How much is that? Oh my God. take that whole position off down there. Take that one off. Take that one off. Just close that out completely. Get rid of that. So that one's closed. Drawdown control done. So 2 positions on, 1 in profit, 1 at break even, 3rd down there. We're at the average. If it pulls back, new leg out. Pound yen. So I just need to do all of this while I can. So that I took an aggressive drawdown control position on this pound yen yesterday here. So that aggressive drawdown control position is working, which is 775. So I'm going to close the aggressive position out, and we're going to use that to get rid of one of these lowers. Rid of that very one sec. Let me just work out which one. That's the 0.13, which is the big one. So I can't close that. So I'm going to close this 0.7 out down here. So drawdown control again done there. So you can't even see. Look how old these positions are. That's from here. So that position was taken on the 10th of January. Yes, cost me $245 in swap. Hold that. So I've made $750 on that, and I've closed that position out. So that's the pound yen. So I don't want to do any more DD control on that. It's only 1.62%. That's fine. Everything else we're in. New Zealand dollar yen long. I do not want to be long. Out that. And stop taking trades. US dollar yen. The only problem with EA sometimes. So yesterday I took an aggressive drawdown control position on the US dollar yen here, which it's closed out automatically for me. That was my TP. Yeah. So I'm going to use some of that profit as well to do DD control. There's way too much on this US dollar yen. We're still at 4.93% in drawdown. So I need to use some of this profit to get some DD control done there as well. Actually, I've just done DD control on the rest, haven't I? I should have done it on this. This is a bit of a mistake. But anyway, so I'm going to close out half of that lower one down there. Might need to do another aggressive on this. I'm just going to leave it at that because we're under 10% now on overall drawdown, which I'm absolutely fine with. That position is under 2% with a profitable trade on. I need one more leg on the yen to get out of everything. The US dollar yen, the pound yen rather, the US dollar yen is the one that I'm in trouble on at the moment. So it's just nothing I can do about this. It's another sort of multi-ADR away from getting out. So what I need with this US dollar yen is this afternoon, I want the unemployment claims to have gone up like 300,000 or something, which will crash that US dollar yen down and give it a good 225, 300 ADR day. So what I'm going to do, because we are just now at this area of balance where we spent a week, we had another week there in that area of balance as well. So we are here now. So we're going to find support at this area because this is where we broke out. So we are retesting this zone again to see if there is enough selling pressure. Hopefully what will happen now, because we've had the bullish yen news, is the market will pull back, breathe on this leg, and then put a second leg in. That second leg will allow me to get another aggressive drawdown control position. So what I'm going to do is wait for the market to push up. If it pushes up, get an aggressive drawdown control position on again, and then aim to get that aggressive drawdown control off somewhere down here as we get to this area. And then again, same thing, drawdown control. Just working the position, basically getting out of it, using the profit to get rid of the loss. There we go. Good lesson in aggressive drawdown control today. So that's the H1 M5 mean reversion. Obviously, all of your H1 extensions are yens. So I'm just thinking out loud. I've got a buy on the US dollar yen. Look. I'm just going to close it out. I was just toying with the idea of turning off the EA on the ends at the minute. But I do want it to scale me in. So can't at the minute. I'm just going to monitor these. Anything that I see going in long on the US dollar yen, on the yen basically, I'm just going to close it back out again. Apart from that Aussie dollar yen, because I need the EA to manage that one. So those are all your RSIs. Up to you if you want to take them. Yeah, I have no idea if this is going to pull back or not, obviously. So a big move like this will tend to get a pullback. If we're going to put market structure in, that's what it does. It pushes, it pulls, it pushes, it pulls, it pushes, it pulls. It's profit takes. So they are very, very short on this. If they want to make money on this particular leg today, they're going to need to profit take it. And then they will add to their short if their bias is now long on the yen. So that is what will happen. Or they will go, this move is starting, we'll flag and break. Yeah, so it will be a case of let the market breathe, stop placing the orders, put a second rally in. So that is what is going to happen, either that or a flag break and drop. Yeah, so I'm going with we've been waiting for 2 months for this, flag break and drop. Whether it happens or not, I have no idea. So if you want to take these RSIs and these ADRs long, you can do, and you'll be scaling in as we come down. If the Japanese turn around and go, actually, yeah, you know, we said March and April, what we actually think now is May or June, that's doing that. I have no idea. And the Bank of Japan have no idea because they change their mind every 5 minutes when the wind changes direction. So up to you if you want to take them. You manage them like any other trade. My bias at the moment, though, is short everything against the yen because I think the yen is going to rally. And also, again, I keep saying it, it's not coincidence. This 150 level, yeah, the Bank of Japan cannot sustain its economy above this level with the US, its major export partner. It does not become cost effective to manufacture goods and export them to the US when the exchange rate is above 150. You're starting to make loss on the manufacturing process. This is why every time we get here, they say, you can't do this. If you do, we are just going to liquidate our overseas assets and we're going to screw you in the process of making our currency better to make ours stronger. This is why we're stuck here. This is what always happens when we get to these levels. So I think we're going to get the same leg that we had previously from that level. I'd have to go out to the 4-hour chart. When we got up here last time. That's what I think we've got coming. Especially if they increase interest rates from a negative 0.1 to a 0. So there you go. So that's your US dollar yen. So there's all your RSI extensions. The others you've got in there are the euro yen and the pound yen. You've also got the New Zealand pairs, the New Zealand CAD, the euro CAD, and the pound New Zealand. So it's all the CAD and the New Zealand pairs are all starting to get extended on the 4 hours as well. So there is opportunities for mean reversions on all of those. And the Swiss francs obviously started moving. So everything's starting to move, which is lovely. I've just gone long on the CAD Swiss as well. I don't really want to do that either. So we had an alert yesterday on the CAD Swiss. Look. I don't mind that actually, because it's the CAD. I'm not going to get greedy on it though. Hedging closed out 5.4% yesterday, 1% banked so far this morning. Obviously a load of movement coming in, so a load of profit being banked. This is how it goes. Nothing else particularly I want to bank at the moment. Swiss yen is doing, didn't quite get to my target on the shorts. And I have got longs on this because it's hedging. So I'm just going to leave that running for the minute. I'm not going to get a second entry on this because it's going to be too tight to that initial entry. So if this does pull up to there, I think I might shut the long and then let it drop. But this is the beauty of hedging. You can just kind of leave this because as long as you've set TPs, as you can see, I've got TP set up there for the longs. I've got TP set down there for the shorts. If it just does this all day long, it's hedged. If it hits something, I'll deal with it because I've just banked a load of money and then it will take a second position. So it's actually quite a nice strategy in regards of stress. You don't have to do anything. I only look at this really once, maybe twice a day. But it obviously does bank a ton of cash but sit in a ton of drawdown. So it's not the most comfortable thing from that respect. Anyway, so that's banked 35% this month. Right, there we go. A lot of movement today. Stopped out on my DAX. God, look at the FTSE. It's not moving. I think I'm going to take the decision to stop trading the indices at the minute. I've made about a $6,000 loss this month on indices. And I haven't been using high risk. I made 7.5 last month. So I've basically given back all the profit from last month, this month on SIH. Because this is, I mean, these charts show exactly what's happening. We get a day and then nothing, and then a day and then nothing, and then nothing, and then a day and then nothing. There's no movement in the markets at the moment. They are utterly, utterly dead. There's one of my old mentors sent me an email last night, just a catch-up email basically, which I get every now and again. Like I say, every now and again, once every 8 months or so. But just it prompted him to email me to say, "How you going? How are you finding things?" Because it's everybody else that is trading is in the same boat at the moment. We're all sitting around going, "What's going on? Why is nothing moving?" It's just awful. The trading conditions at the moment are absolutely horrific. It doesn't matter what strategy you are trading, it ain't working. Which is, well, I say apart from position trading, we know that because it doesn't matter what happens, does it? We're always going to be making money in some way or form. It's just the ability to extract it is a hell of a lot harder at the moment. But yeah, he emailed me and just said, "How's it going? I'm having the worst month I've had ever." Yeah. And bear in mind, before he started teaching me, he'd been trading for 15 years. So he's a 30-year veteran doing this. This is the worst month he's ever had, ever. So it's not good, obviously, but it's good to know that other people are in the same boat as you, struggling at the moment, because this thing is just so unpredictable. And it's because we've never been in this situation before. Yeah, we've never recovered from a pandemic. We've never recovered from a pandemic using an 18-month interest rate rise at the fastest rates we've ever seen. We've never had a stock market crashing as fast as it has or as hard as it has while the interest rates have been going up. And we've never sat sideways after this before. The market has no idea what to do. So if the banks and institutions are sitting there really having no bias long or short, so they're just sitting on their hands and just going, right, let's just take as much as we can out of tiny little movements, you can't do anything. So everybody's sort of, it's one of those things where it happened in the pandemic. That word unprecedented started being used all the time on the news. This is unprecedented. This is unprecedented. This is unprecedented. This is all unprecedented. This is unprecedented. This last couple of months, in fact, this last sort of 3 to 6 months, I would say, never seen anything like it. It's either crazy or dead. And when you're trying to trade anything, you need some kind of movement that is rhythmic that you can ride to be able to bank, because you've got to be able to have some idea where the thing's going. But, you know, these things at the minute, like this US dollar yen, you know, this is a prime example of utter confusion for weeks and weeks on end. And then we're like, oh, that's it. It's like, is it? No. Oh, that's what's going to happen. It's just going to do that. Yeah, what I'm expecting to happen is that. That's what has happened all my life. It's not happening. It's doing that. Step, sideways, step, sideways, step, sideways. All it means is market structure's playing out. It's just playing out in a very unprofitable way, unbankable way. Because what we need is that. That's not what they're doing at the moment. They're getting in and going, we're not sure. No, we were wrong. We're not sure. That's what the bank movements are at the moment. So, but it was nice to hear someone else who's way more experienced than me going, I don't know. Because it gives you confidence, doesn't it? When I sit here and go, I haven't got a clue, and someone else is telling me they haven't got a clue, you're in the same boat. Don't worry about not having a clue. It's totally normal. The banks haven't got a clue. The central banks haven't got a clue. Look at this. Look at the Fed. They came out last year and said, hey, everybody, February, March, we're going to drop the interest rates. Actually, no, it's going to be March, April. Actually, no, it's going to be April, May. Actually, no, it's going to be May, June. It's June at the moment. So what are they going to say next month? It's June, July. We could be doing this full year. So it'll be an interesting one. We'll see. Afternoon, everybody else. What about Pound CAD? I'll catch up on the chat. Pound CAD rallying at the moment, coming up to a nice resistance at monthly high. So looking for a pullback, I would say, on that leg there. There's no bias at the moment on this long or short specifically. You know, you scroll out on something like this and look at the last 3 months. We're just in a contracted range. It's not bullish. It's not bearish. It's going sideways in a very large range. So it's pushing up at the moment into what was the monthly high last month. And then you're looking at the 3-month high. That's a quarterly high. So you're coming up to the monthly quarterly highs. And they've sold from that level twice. So if I was you, I'd be looking for shorts. But one of these guys could decide to come out and give us some information about interest rates. And suddenly that goes like that, or that goes like that. But again, look, it's no idea what we're doing. News. Oh, no, it's not. No idea what we're doing. News. Sit around for a week. Okay, this looks like good news. Canadian GDP figures come out this afternoon. If they are bigger than normal, that's coming down. If they are worse than normal, that's going up. But I wouldn't expect it to go up and continue to go up. I'd expect it to go up and then do that. That's all we're getting. So it doesn't really matter which way you go with anything at the minute. It's just a case of we're waiting for news to drive it. But don't expect normal market structure pullbacks because we're just not getting them. We're not getting enough RSI extensions either. You know, the RSI extensions we're getting are on one currency when one currency is really weak or really strong, like the Swissy and the yen. And those moves are normally undoing themselves a lot quicker. They're just not at the moment. So, but there's no bias on it. This afternoon, we're waiting for, obviously, the GDP on the CAD. But there's no pound news coming up. No pound news coming up until mid-March. Payment counts. We've got the budget and the GDP on the 13th of March. There's nothing to drive it. So wide range for a few weeks, basically. Morning, Mr. Lunary. A bit of a dumb question. Is swap already included in the profit loss shown on the terminal? Yeah. Yeah, it's all there, look. In your terminal. Look. Swap. So that includes your swap. So that is $100 in drawdown plus $63 worth of swap. Yeah, that's on the euro yen. Look. What was I just going to say? Brain went then. No, I can't remember. Asking the Discord about New Zealand dollar Swiss, long 4 positions. Yeah. So, oh, I see. You got in long up there. Okay. Right. So you got 1 position on up here, 1 on where I am. Okay. So first thing I would say is, why have you got 4 positions on in that much distance? So you've got 1 there, 1 there, 1 here, and 1 somewhere down here. Yeah. Look at the distance between your trades. That's 10 pips. It's a quarter of an ADR. That's about another quarter of an ADR. Very, 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 very close together, aren't they? Very tight. So, I mean, you shouldn't be needing to do, well, I don't know, drawdown control. Maybe you are looking to do it, but looking for pushback up into that. They haven't tested this area yet. So the thing that you are going to struggle with on this potentially is the Swiss franc strengthening, because obviously this is had good news this morning. The New Zealand dollar collapsed off the back of that news, but that isn't really news. So this New Zealand dollar move negative isn't a real move, because there's nothing wrong with the New Zealand dollar. All they did was keep the interest rates the same as they said they would. So, however, the market, I think, was factoring in an interest rate rise on this, because they said last month, or rather in beginning of January, they said there's a good chance that if inflation is stubborn, we may need to put our interest rates up by another 0.25%. So what the market did was go, oh, they're going to increase their interest rates by 0.25%. And then they didn't. And they went, oh, well, it's their fault for factoring in that interest rate rise. No one else has done it. I don't know why the market factored it in, but they did. They're undoing that move. I think that's what this is. But what you'll probably find is it will just stabilize unless the Swiss franc powers up for some reason, i.e. good GDP figures. So it could come further down. If it's coming further down, that sort of area here is where you'd be looking for a bounce. You need to plan entries down to there. Quarter of an ADR is very, 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 very close together. Yeah. So it's up to you how you space your positions, but spacing is one of the biggest problems people have when they go into large drawdown. The positions are too close together. So half an ADR to 3/4 of an ADR is kind of the sweet spot, somewhere around there. Quarter of an ADR is very aggressive. It can make an awful lot of money in a range-bound market or a normal market structure market, where you get good moves and profit takes, good moves and profit takes. Anything range-bound, quarter of an ADR, absolutely going to kill it. Anything that squeezes, quarter of an ADR is going to put you into drawdown very fast. So if you're worried about it, it depends what you've made this month, but don't forget you've got a pot of cash to deal with any problems. So this pot of cash, whatever it is down here, if your New Zealand dollar Swiss is getting uncomfortable, remove it. Remove that position. Remove half of that position. Take one of those off. So if you've got 3 there, take the middle one off, because it's not going to cost you an awful lot of money. It's just going to reduce the level of drawdown. But I would suggest putting the trades further apart. Yeah. So if you're using the any of the set files that were published, I think the ADR reversal set file, the original one, has got a quarter of an ADR as spacing. It's an aggressive set file. So if you're using that, I would say just move the ADR spacing up to half, or maybe even 3/4. I'm using half. Sorry, I'm using 3/4 scaling on H1M5. On ADRs, I'm using a half ADR scaling, and the same with the H1 hedging. So quarter is a little bit too aggressive, I would say. But this is what position trading is all about. Don't forget you are managing a position within a portfolio. Yeah. So if something is getting uncomfortable, deal with it. Shut some. Get rid of it. Remove it. This is in 4.78. I've got faith in the yen. Probably rightly or wrongly. I don't know. Probably wrongly. But I've got faith in the yen. So if I haven't got faith in the yen, what I can do now is close that, reduce that by $1,500. Yeah, take myself just down to about $3,000 profit this month instead of 4.5. But I will be much more comfortable. I will have reduced that by half. This is the discretionary part of position trading, is when you close positions out. And this is why I say in the bootcamp, I can't give you a rule for doing drawdown control or for doing aggressive drawdown control, because it's to do with your comfort level as an individual. If you are uncomfortable in 1.5% of drawdown, you'll be doing drawdown control on that. I'm not uncomfortable in 1.5% of drawdown because I've been doing it a long time, and it's just the norm. 3% of drawdown is where I start to go, might need to start doing something about this soon. I'm going to keep a close eye on it. When I start getting to 4% of drawdown, I'm like, this isn't working. I need to do some aggressive drawdown control. Anything above there, I'm thinking about cutting positions off. Take the loss. It's wrong. Totally wrong. The market is squeezing you much harder than expected. However, as you've seen in here, if I've got one position in 5 or 6% of drawdown and everything else is fine, I will hold on to it as long as I can if I can see a decent resistance coming up, or if I can see the market just doing that. I will hold on to it and not do anything with it because it's not doing anything. It's not hurting me anymore. If it pushes above, I will exit. And as you can see exactly what I've done on the US dollar yen, I've got stop losses up here. This is what they are for, stopping your account going hideously wrong. If this thing screams up there, I am shutting that and taking it off and going, that was a blown month. I'm still going to make money, but I'm just going to have an awful month. I can't do anything about it. But that's your decision. You've got to be able to control that yourself. And you're only going to learn that through doing. And this is how we learn. Make mistakes. You're never going to get it right first time. I didn't. No one does. But I would say just try and space your positions out more. Also, put the link of Discord in the video descriptions here. Well, there's links to the website here, and there's links to Discord on the website. But I will try and put the links to Discord. I also need to do it along there, don't I? I need to change that. That reminds me, yeah. I had a similar issue with New Zealand dollar Swiss shorts today. Too much swap. Yeah, nothing you can do about it. Swap. Swap is swap. Thanks for subscribing, Michael. Welcome aboard. I entered a 35 lot buy on Aussie dollar yen. No? Did I? Well spotted. I would have noticed that, and to be honest, it wouldn't have got executed because I haven't got enough margin for that. Well done, well spotted. I'm glad I've got you in here. That's because I'm rushing to do things. 35 lots. Sorry, let me just measure that again. 39, so I'll get an entry there. So if it closes there, I'm going to take a manual. I'll give it the opportunity to get me in one. Good spot, Evil. That isn't the first time I've done that. I don't do it very often, but I'm rushing. Does the MREA track swap fees as part of the basket trades P&L? The EA tracks your P&L. So if your P&L, it uses this number here. Yeah, this is the profit figure is what's tracked. That. So, yeah. Accidentally got long New Zealand against the yen. Thought I'd get out at break even, but now I'm in 2 positions and scared the Japanese are going to buy the yen. If the yen just drops, they won't. This is what they want. Yeah. So the Japanese will only intervene if they don't get what they want. Right. This is what they want. They want the yen not being weak. They don't want the yen necessarily. I mean, everybody wants their currency to be strong, obviously, but they don't want it to be, the strongest thing out there. They just don't want it any worse off than it is now. So if this just does this, they won't do anything. If it goes above there, they will. If it goes above there and you've got longs on, doesn't matter, does it? You're going to get out your longs. So I'm in the Aussie yen. Look, I don't want to be. I'm in it. I could close it out now. It's $100. I don't want to because all these yens have had a very strong push now. So I think there's a good chance that we might get a little bit of a pullback. So I'm just looking for that today. If I can get that to a break even, if I look at this and I suddenly see that at $20, it's coming off. I'm not going to take $100 hit just for the sake of it. And if I held 1 yen long at the end of the day, I'm not that worried. Look, I've just got into the CAD yen again. I've got to turn the EA off. How annoying. This is the only problem with automation. If you've got a bias. So let me just quickly just find all my yens. Euro yen. Short only. CAD yen. Oops. Short signals. Pound yen. Shorts. So I'm just making sure that the EA is only going to manage or take shorts on the yens. I can't do it with that one because that one I am in. I need it to do both. Swiss yen, shorts, New Zealand, shorts. And ADR, US, shorts. Euro. Shorts. I've just got a buy on the, I'm just going to close it here. Pound yen. Do not want to be in long. Stop taking them. Aussie shorts. If it pushes up one over ADR to the upside, no problem. I'm happy with that. I'll go short, but I'm not going long. And New Zealand. It. Done. So I'm not getting any more longs. There. Can we find your mentors on YouTube? I don't know. Why would I send you to my mentors? What's wrong with me? Morning, Leshy. Distance to ADR set to a quarter of an ADR, TP and a quarter of ADR, Michael. Yeah. So just set it wider. There's nothing wrong with this is the thing with set files, yeah. So I get asked constantly with all of my products, But specifically with the market reverse alerts, yeah, what is the best set file? There isn't a best, there is a different. Yeah, sometimes it's better to get in a quarter of an ADR apart. Sometimes it's better to get in half an ADR apart. Sometimes it's better to get in one ADR apart. When do you know? After you're in. There is no way of predicting the future. So I can't tell you whether it's better to be scaling in a half an ADR or a quarter of an ADR on any instrument, because I've no idea how it's going to move in the future. So no one can give you that information. All you can do is look at back tests and say, right, on a quarter of an ADR, when the market's range bound, it kills it. On a quarter of an ADR, when the market is squeezing, it blows the account. So what would you rather do? A half an ADR doesn't make as much money in a range, but it doesn't blow the account. It's not a rocket science decision, is it? You use a half an ADR, not a quarter. However, if you want to pass a proper valuation really fast, use a quarter. But bear in mind, you'll probably blow the account at some point in the future. But are you looking for long term, or are you looking to squeeze a load of cash out of them? Quarter of an ADR is right. So there is no right or wrong. No one can give you any set file. Every EA on the planet that you can buy anywhere, they will give you a set file. Whether that set file works over the next month, they don't know. I don't know. No one knows, because we don't know which way this is going, up, down, sideways, or how far it's going to go. It could put in a 4 ADR move. It could go 150 ADR, 150 ADR, 100 ADR, 200 ADR in 4 days. Yeah. In which case, whatever they've back tested is out the window. You have no idea what the future brings. So you can't put a specific set file together. You just use what works the vast majority of the time, and you adapt. You have to adapt, because this is never going to, like I've been saying this morning, the conditions that we're in at the moment for this market are just unprecedented. It's that word. I was joking with my wife about it over the COVID period when we were in lockdown, saying, God, if I hear that word one more time, literally on the news every day, someone was saying something was unprecedented. Yeah, all right, we've never seen it before. Deal with it. Yeah, just because it's unprecedented, just stop going on about it. You've got to deal with the situation. Yeah, if you want to carry on doing this, yes, it's unprecedented. Adapt and survive. If you don't adapt and survive, go and work at McDonald's. Basically, that's what it is with this job. You've got to be able to do this. You can't stick an EA on a chart, go and drink Mai Tais on a beach and expect to become a millionaire. It's not going to happen, because there's nothing on the planet that knows what this is going to do in the future. You've got to watch it. Euro CAD is pumping like crazy at the moment. What's going on? Is it the euro? Is it the CAD? Don't know. You've got to be able to know how to find out how which is moving, why it's moving, what's going on, because you need to adapt to this. If you've got a load of short positions like I have on the euro, you need to start worrying, because it's the euro that's pumping. So you just need to. You're better to be cautious than aggressive. Yeah, because you can always become aggressive. If you start aggressive and blow your account, you can't become cautious, because you've blown your account. Yeah. Start small. Start with 0.01 lots and go, wow, this works fantastically. I'm not making any money, but it's working. Up to 0.02 lots. I'm making more money. I can see the drawdown going up a bit, and it's working. Up to 1.5 lots. This is amazing. I've blown the account. You know now. But you can do all of that in the backtest. Backtests will show you what would happen if you did X, Y, and Z, which is why I encourage everybody to test themselves. Go and do your own backtesting. Everybody asks me, what's the best set file? Use the base ones that I've put out there. Test. Do you like it? Yeah, use it. Don't like it? Tweak it. Not having a go at anybody. I'm just saying, that's what you need to do. Hitting the thumbs up, ladies and gents. 26 on 80 watching, and we've got 26 likes. That's not enough. Don't be a bum. Smack the thumb. Morning, Blue Trader. There's a new button, actually, I want you to hit now. We discovered it yesterday in the live room yesterday afternoon. We discovered this button over here in chat with a $sign on it, right? And you can send me money. Which is quite amazing yesterday. I got tipped $50 yesterday, which I am forever eternally grateful, and that is what's paid for my Lamborghini. Still a long way from earning a real one. If you want buys on the yen, could you change the settings to alert only? So you would do what I've just done, which is change it to short only. So basically I've told the EA, basically that's what that setting is in the market reverse alerts EA, which is why it's there. Yeah, so if you have a bias, the trade direction, you just set it to short signals or long signals. It's automatically defaulted to both, so it will get in on market movement because we don't know which way it's going most of the time. So at the moment, I'm interested only in going short against the yen because the yen is going to power up. So because all crosses are XXX JPY, if the yen's going to power up, I only want to be selling on anything that is a yen pair. So if you don't want to trade it at all, yeah, turn it off. Go into, oh, you can't, but go into the common tab and then press the deactivate button. I can't remember what it's called. I'm going to have to look it up. So you go into the the common, and you allow live trading, untick it. Now it can't trade anymore. Yeah. Thank you very much, Steve, for the $5. Euros even. Thank you very much. Much appreciated. You did that yesterday, though, didn't you? You don't have to keep tipping me, honestly. But thank you. That's another coffee, because I can't quite buy a pint with it. Thank you very much. I was only pointing that out as a joke. You don't have to keep tipping me. But if you want to keep tipping me, that's fine. Still testing in demo with lots of back testing, yeah. The only problem I would say, Michael, with backtesting in demo is if you're trading a demo account, it's worth a $5 to see me smile. That's more of a grimace, isn't it? Oh my God, you can see me close up with my gym hair, look. If I can get the mohawk going. Not quite. Yeah, the only problem with trading demo. Oh, can I get a refund? I don't even know how to refund you. I don't even know how to get the money, to be honest. I've got to look it up. I'm sure it'll just get paid into my AdSense account, which pays me about $50 a year. I don't earn any money in AdSense, but I guess it's that. Yeah, demo. If you are trading a demo account, you're going to find that you will make different decisions. So if like that trade that you're in at the moment, you don't care what happens. So you'll just go, screw it. I'll just go long with one lot and see if I can get out of it. And if it goes down, I just shut it. Doesn't make any difference. There's no financial impact to you. You're better off, I think, personally, trading with a small account with $1,000 or $500 or something in it that actually means something to you. If $1,000 doesn't mean much to you, trade with 5,000. If 5,000 doesn't mean much to you, trade with 10,000. You need to trade with an amount of money that if you lose it, you won't be bankrupt. You won't have a financial problem, but you'll be gutted. Yeah, I started off, my very first account was $1,000, basically just a little $1,000 account to see how it went. Obviously, I blew it within months. The second account I used was 5K, which I'd gone to after a demo account, and I'd proven that I could do what I was doing in stocks. I blew it. That hurt. Yeah. The next one was on my credit card. Yeah. So that was oh my God, if I lose this, I'm not only losing this money, I also have to pay this money back out of my account each month, out of my money. I've now got to pay back the money I've lost, not only giving it to the broker, but I've got to pay it back off the credit card. But the decisions you make on those types of accounts are going to be very different to a 100K account, demo account with your broker, where you're trading 1.5 lots and pressing a button and not really giving a monkey's what it does. As much as you say, yeah, but I'm going to be very, I'm going to do it properly. You won't, because there's no impact. Yeah, that trade that I just nearly put on for 35 lots, which I'm very glad you pointed out. Thank you. That would have hurt. And if I would have got it on, I don't think I would have got it on because I don't think I think I would have been margin called on it. I don't think the leverage would have been there. But if I had got it on, the next time I looked at my P&L, I would be like, what the hell? Yeah. And I would either make a very large loss very quickly or, you know, depending on what happens in the market. I mean, to be honest, if you put a 39 lot trade on and it ticked up to there, I'd be taking it off instantly because it'd be worth about $500 or $600. More than that, to be honest. Look, I've got 9.76 lots on there. Yeah, so if this moved down by an ADR, that's going to be a big problem. But you would notice it because you'd be like, why am I not in 9% of drawdown? Why am I suddenly in plus 22%? I would take it, obviously. But what if I was in negative 22% because of that trade? I've got to close it out, and that's the entire month gone. On a demo account, you wouldn't give a monkeys. Doesn't affect you, does it? Psychology is 90% of this job. Managing your emotions, and this is why I use EAs, because there is no emotion involved. The EA did all of this. I do nothing. All I do is I look at this P&L. My emotional connection to my finances is this. When this gets green, it goes there. When it's red, I wait. If it goes red higher than I expect, I deal with it. That's it. That's the job. If this is a demo account and that is sitting in 15% drawdown on the US dollar yen, you're not going to do anything. It's not going to teach you anything. It's not going to help you learn drawdown control. It's not going to help you learn trade spacing. It's not going to help you learn anything. It's just going to learn. You're just going to learn that sometimes it will go into 14% drawdown and come back and make 14% because you let it. Because you have no connection to this at all. You've got to do it on real money. And it's got to be an amount of money that you would go, ow. Think of a holiday, yeah? So I spend rough pence, but I spend somewhere between 7 to 12 grand on holidays. Yeah. So I go on nice holidays, family of 4, it's not cheap. So if I was going to do that, I'd be going, right, let's stick 7 grand in account. If I lose this money, we're not going on holiday this year. Think of yourself telling your partner, sorry, we're not going on holiday this year, love. I've lost the holiday fund. It's got to be that important, but it's got to be a, don't do that again, you idiot. Okay, we're going on holiday next year. It's not going to kill you. It's not going to hurt you. It's got consequences. Got to have consequences because otherwise you're not going to be emotionally attached to making it work. Unless that goes for when you're going live as well, full time. If you're going to go live full time as a trader, you need 3 months worth of income in the bank, plus a balance large enough that if you made 10% on your account, it would pay your bills. Yeah. So for example, if you need to earn $3,000 a month, for example, right, you're going to need a 30 grand trading account because you're going to earn roughly 10% a month. Yeah. So you need 30K to earn 10%, which is 3K. You're also going to need 9 grand in the bank because you need 3 months worth of money in the bank. Because if month 1 is drawdown, month 2 is a small profit, and month 3 is where the market goes your way and you make the money, you're not going to pay yourself for 3 months. So you've got to have 3 months worth of salary there. So to get started to earn 3 grand a year, you need 40 grand in the bank. Think about that. And then think about play money to get emotionally attached to it, being somewhere about 5 grand, 7 grand. All of a sudden you realize how much money it costs actually to do this as a job. You can't earn a Lamborghini on $500. Unless you get one of those. And I can buy another one now. It's opening doors and everything. And a spoiler. Would you mind clarifying how current interest rate results in high yen swaps? It's possible in the MRA for baskets to be profitable but make an overall loss on the day due to swaps. I don't know. Don't know. As for the high interest rates and swaps, basically your swap is the differential between prices. Yeah. So banks and institutions charge an overnight. This is why it's called the overnight rate. Yeah. Go and look at news. The official cash rate, also known as the overnight rate. There you go. Look. Interest rates at which banks lend balances held at the Royal Bank of New Zealand to other banks overnight. Everything you hold in an account, right? So banks and institutions will, if you stick a load of money in, they'll go, we're going to give you 3.5% interest APR. Over the year, we'll give you 3.5%. But what they're doing is interest is accrued on a daily basis using the bank's overnight rate. Yeah. So when you have a swap, you have money invested in the Aussie dollar and the Japanese yen because you are trading the Aussie against the yen. So you are holding one currency and trading against the other. The swap is the overnight rate differential between their interest rates. So the swap at the moment on the yen is -1. And on, for example, the US dollar, it's 5.5. So you're paying 5.6 to hold a position. Double swaps, triple swaps on Wednesdays. You see why it becomes expensive. Yeah. So it's to do with this. If you go back and look at the year 2001, you were on 0 interest rates. There was no swap fees. Now we're paying. It's the same as a mortgage. Yeah. My mortgage is locked in at a ridiculously low rate, 1.9%. I took my mortgage out when interest rates were 0. So the bank is charging me and making 1.9% on me. If I take my mortgage out now at 5.25, my mortgage will be somewhere in the region of 7.5%. Same as swaps. The swaps now are ridiculous. The swaps back then were nothing. Exactly the same as mortgages. As for the EA will close positions out when it moves to a distance. So the market reverse alerts EA, and this is one of the reasons I've changed this in the new version, or in not new version. I must stop saying new version. It's a totally different thing. But in the position trading EA, the one that I'm developing, there is no take profit after movement of distance. Yeah. So if this is a good example. Yen at the moment. Which yen have I got on pound? So average price. Have I got anything that's in profit with multiple positions? No, because I just closed them all out, haven't I? That's not useful. So this average price line is this line here is your average price. In the EA, there's 2 options for exiting. One of them is close at an amount of money. So when all of your trades hit an amount of money, it will close them out, which is a positive amount. That includes your swaps. That doesn't, but in the EA, yeah, in your P&L. A distance, right? I've showed you earlier, didn't I? On the pound yen, the average price was somewhere like that. Price was down here, and it was showing a negative number. I think it was the CAD yen on the ADR account. There was one. Euro pound might actually be a good example. But basically, this is an average price. So let's say, for example, it moves, you've set it to take profit at 1 ADR, which is 26 pips. When this moves 26 pips beyond that line, it will close your positions out. I have been that far down, and I showed you earlier this morning, on some positions, and it's showing a break even. Oh, there you go, CAD Swiss. There's the example. That's one I want, isn't it? CAD Swiss, yeah? So I am $45 in profit on this. Look how far beyond the average price I am, yeah? All of that distance, which is a total of 1 ADR. So I am 1 ADR in profit, yet I'm only making 0.1% because it swaps. If you say I want to be in profit by 1% in money, which is $300, the EA will close you out when that gets to $300. If you tell the EA to close you out when you're 1 ADR beyond average price in pips, you won't necessarily be in profit, will you? If you've been holding something for years and it's not making any money because of swaps. So that is the best column to use. So in the EA, the columns I'm talking about are these ones. Yeah. Partial profits and drawdown control. No, sorry, it's not what I'm talking about. It's not that. It's close all when X money profit. That one. And close in profit at % of ADR. So this one, if you set that to half an ADR and price moves half an ADR, so you get in and it drops half an ADR and gets you out, that's going to make you money because you've got no swaps. You've got nothing else but commission. Yeah. If you've been holding something for 6 weeks and it moves 1 ADR into profit, you may well not have money. But if you use that setting, it will close out when your P&L in your account on all positions is positive 15. Now, if that means it's got to go 2 ADR beyond the average price you have before it actually gets to that monetary value, that is what it will do. So what I would do at the moment, and it's a good point, is stop using ADR as a target and use monetary value. So if your account is 10,000, for example, and you want to target 0.5%, you would set that to be 50, wouldn't you? Quick maths. There you go. Times 0.5% equals 50. Yeah, so you would put 50 in there. And what it will do is if you have to hold something for 6 weeks, yeah, it will just hold the trade until the total basket profit is $50 and it will close it out. The distance that it has to go to get you to that monetary value is the distance it's got to go to. But if you set it to half an ADR, it might get you out there. And that might be a negative $25 loss. At the end of the day, it's not the end of the world, is it? It's getting you out because price is going your way, which is the outcome we were looking for. But so there you go. That explains it. Morning, Chucks. Morning, DS. New subscriber. Loving your stream. Good. Welcome aboard. You are getting like Greg, flashing your Lambo every day. Yeah, he hasn't got a Lambo though. He's got a Rolls Royce, a jet, multiple houses, a gardener. Well, that made up crap. It's not made up, obviously, it's all real, but it's not. It's through education. Right. So that's all I've got for you this morning. So hopefully we get a continuation on these yen pairs. Up to you if you want to take the mean reversions on them. You can see, obviously, we're extended 150 ADR. There's a good chance if we are going to start some kind of market structure leg, it will pull back on it before it drops. But it could also just go into an accumulation and drop, and it could go into a flag break and drop. So personally, I just have been in these shorts for such a long time on the yens. I can't bear to go long because from a mental perspective, if this comes down and I've gone long, I will just pull my hair out. And I haven't got much left, as I just showed you. Well, I have actually, but it just looks like I haven't because it's wet. So I'm personally not going to take the mean reversions on them. I'd rather just sit out. If they all pop and come back up to here and everybody makes 1% on everything, good job. I just can't bring myself to long the thing at the minute. They've been promising for such a long time they're going to announce something to do with this. And they haven't, and they finally have tonight. And that's the key. I'm undecided on monetary policy decision for ending negative interest rates in March or April. I'm reading that, and I think this is how the market is reading it, is I'm undecided whether to do it in March or April. But he could be equally saying there, and they're always woolly like this, but I'm undecided whether or not to do it at all in March or April, which means maybe May, June. But he's not saying we've decided that we may not do interest rates. He's talking about timings. which is indicative of doing. So I think this is what we've got with the yen. So I think the market is going to like this news. We've been waiting for this news for an absolute age since we were promised it at the beginning of January. So we're 6 weeks into the promise, and he's re-promising. And I think it's also a byproduct of what the US dollar did yesterday. Yeah, the US dollar yesterday had another go at longs, i.e. we put in another bull day, and the Japanese just went, stop it. And they have. There's more than one way to stop it. You don't need to intervene. You can also promise, which is what they've done in this case, I think. So we'll see what happens, but it's looking hopeful. So I'm on again this afternoon at 1:15. So we're going to be trading or watching the GDP and unemployment claims for the US. So it's Canadian GDP and US unemployment. So we'll see what impact those have. Misses across the board would be fantastic, but we will see. Mumo, thanks very much, appreciated. Had my set file using both ADR and monetary. Yeah, so the set file was initially set up like that. But don't forget that set file. All the set files for the market reversal alerts EA are from 2022. And all of my back testing was done from 2022 back to 1998. So, sorry, to 2008. 2018. 4 years. Actually, I tested longer than that, but that was the main bulk because it covered COVID, it covered all sorts of stuff. And the market crashed 2018. So those set files were produced when we came out of a period of very low interest rates and very low swaps. And we were in a period of very low interest rates or no interest rates and no swaps. So where we are now, we've gone through this 18-month period absolutely fine. You know, I've been making money, no problem, using the EA, using the strategy for the last 2 years, live in here every day. It's just that we've not had such a long squeeze on a yen pair. And this is the key at the moment. If you look at the differentials, the reason we are noticing this now is because we're trading and squeezing the yen. If we were trading and squeezing the euro against the CAD, we wouldn't be noticing these swaps as much because the differential is only 0.5%. So, yeah, but there's nothing we can do about it. But the good thing is everybody's interest rates are going to come down and the Japanese's interest rates are going to go up. So the differential is going to get closer, which means our swaps are going to get smaller. And you've also got the other thing you can do where you can just trade in one direction. So you've got a positive and a negative swap. It really limits the amount of currencies that you trade. But if you trade only low swap and positive swap currencies, you would never have a problem with it. But you're going to miss a lot of opportunities. All these one in, one outs or two trade positions that play out in 3 days, you'd miss them all. So it's a cost of doing business that you just have to suck up. And at the moment, it is crap, which is, you know, partly why this month is like this, because the month hasn't been bad, hasn't been good, but it has been expensive. And it still is expensive. Look at my swaps. I mean, my top swaps at the moment are still $300 US dollar yen. Hold since the 16th of January. So this is a 6-week hold. It's costed me $300 to hold one trade with a 0.3 lot size for 6 weeks. Hell. But there's nothing I can do about it. Just got to suck it up, unfortunately. With the new EA, you'd actually be able to test like 20 years in a day. Yeah. Can. It's amazing. Let's do it. 2004. I have absolutely no idea what this will do. But this is on the 5-minute time frame. I don't even think I've got data going back to 2004. I'm pretty sure I haven't. $2011 I've got. Let's go 2014, do 10 years. This should take, I'm not going to do it like that. This will take 6 minutes. Six minutes? Something like that. So this should, yeah, it takes about 6 minutes to do 10 years. On control points. Look at it. Look at the speed. You can't see it behind my head. It will come out. Where's my mouse? There. It'll take a while. Oh, it's crashed. That's blown the account. I've no idea what this is set to do. So this is probably using a ridiculous amount of risk or something. Or some weird set. I've no idea what I've got this set to do. So yeah, it's I don't know what it's doing, but it blew the account, whatever that was. So but yeah, so you can test as much as you want. It's going to be fantastic, and it's really, really quick. So but I haven't done enough back testing yet myself. And as you know, back testing is just a way of giving you some kind of robustness reassurance. So, right, I will leave it there. Anything you need, let me know. I'll be in Telegram and Discord. I'll be back this afternoon at 1:15. We'll trade the US session for the unemployment claims and GDP. Indices this morning. DAX. Couldn't make it up. I'm just having the unluckiest month ever on indices. So last week I missed a break because I said I'm not going to trade today, and it flew. Today I cocked up yesterday because I made a boo-boo with the EA, and it didn't do the auto-aggressive exit, which it would have done. This morning's opening range break is a 5R straight to target. Job done. Thank you very much. Just not. It's the last day of February. I'm sick of it. I'm glad to see the back of February. I've had enough. Bring on March. Anyway, I'll be back this afternoon. Anything you need, let me know. Other than that, I will see you in the next session. Have a good one.